welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your queries will be answered during the show. So please keep commenting on our live feed. We will have our technical expert address and analyze your queries later on in the show. But before we kickstart, let's see what the global handover looks like. Recession fears lead to another broad-based sell-off on Wall Street. All key indices correct over 1% as risk-off sentiment continues to weigh, heading into the final reading sessions of the year. Stocks in the Asia-Pacific also see steep losses. The SGX Nifty 2 signals a weak start for the Indian market. Crude oil prices drop overnight as a surge in COVID concerns in China stokes demand concerns. Brent trades below $83 a barrel. European markets closed mixed yesterday as investors continue to assess the prospects of China's reopening and the possible headwinds coming down the pike in 2023. Indian banks' balance sheet grew in double digits after a gap of 7 years, says the RBI report. Will things remain strong for the sector in 2023? Other stocks in focus: Tata Power, Ashoka Buildcon and JSW Energy. All right, let's kickstart the show with Neha Dave, my colleague, joining in from Moneycontrol Pro, who tracks the banking space very closely. Hi Neha, good morning. Most things flagged off by the RBI in its latest report point to the resilience of the banking sector. Now, talk to us about how things are likely to shape up in 2023, because if we look at the year gone by, that's, all set to be concluded in just a couple of days, it has been a strong one, not only for private sector lenders, but also for PSU banks. Tell us what lies ahead in 2023 for banks.
Thanks, Karunya, for having me on the show. So as you rightly pointed out, that RBI's report on trends and progress in banking, has given a good picture of what has happened to the banking sector in the year gone by. Calendar year 2022 was a very good year for banks, overall banking system. And one of the biggest positive aspect is the credit growth has picked up. If we look at the latest numbers, the credit growth has accelerated to almost a 10-year high number of around 18% YOY as of December end. Now, at the same time, while credit growth has picked up, deposit growth is lagging behind, and it is deposit has grown by around 10% YOY as of the December numbers that we have. So there is a wide gap between a credit and deposit growth, and which has led to reduction in liquidity surplus for the banking system. So liquidity is likely to remain tight going into 2023. We have seen that banks will be competing among themselves for garnering higher deposits. Also, RBI has increased deposit rates, repo rate by 190 basis points in this year so far, and there'll be a better transmission of this rate. So banks will be increasing deposit rates going ahead, and we can see some fillip to the deposit growth going ahead. As far as the banking system is concerned, we have seen that the profitability of the banking system as a whole has been very good. It has increased to the levels that was last seen in 2014-15. While private sector banks continue to do well, the positive surprise was from the public sector banks. Most public sector banks have cleaned their book, and the credit growth is also helping in terms of profitability. So going forward, if we have to talk about what is the likely scenario, there could be some pressure on margins going forward for banks in general. And this, however, that is not a big concern, because this would to some extent be offset by the higher credit growth. So the top line of banking system as a whole, of the banks as a whole, is likely to remain very healthy in 2023 for both public as well as private sector banks. So, and if we come to the other aspect of the top line, which is the other income, there could be some pressure on other income or the non-interest income, primarily because the rising interest rates has increased the yields, and this leads to a treasury loss for banks. We have seen that banks reported treasury loss or mark-to-market loss on their trading book in Q1 FY23. So that non-interest income could be under pressure. But the biggest benefit that banks will continue to get is from the benign asset quality of the banking system as a whole. The provisions of the banks will continue to trend downwards, both for public sector banks as well as private banks. One thing that investors need to watch closely is how the restructured book behaves. If there are higher slippages, there could be some hit on profitability. But overall, the profitability of both public as well as private sector banks would continue to be very strong going into 2023.
That's heartening to know, but like you said, margins could be under pressure. There could be some mark-to-market losses because of the rising interest rate regime. Talk to us about how things will play out in terms of earnings and which are the stronger banks that one should focus on right now between private or public sector. Do you have any favorites?
Yes, so a lot has been talked about public sector banks. No doubt, the profitability of public sector banks have improved. The return on asset and return on equity, for public sector banks, has improved to around 0.8%. That is return on assets. Now, going forward, also the profitability is likely to improve, and many people have got across the street have got positive on public sector banks. And if you look at the broader numbers also, public sector bank still continues to enjoy lion's share in terms of advances as well as the deposit of the entire banking system. But very interesting thing is that if we exclude SBI from the public sector banks, the public sector banks continues to are losing the market share to private banks, and hence our preference still continues to be private sector banks. So if we talk about stock specific, SBI is something that looks good. It is still trading at around 1 time forward book value, and the return ratios of the bank has improved. So within the public sector bank, we'll continue to prefer SBI. There will be some tactical opportunity in some smaller mid-sized public sector banks, but as I said, the overall public sector banks, excluding SBI, is showing that they are losing market share to private banks. Now, private banks are continuing to do well. The profitability has improved. Even now, the mid and the small size private sector banks may participate in terms of improving profitability. On the private side, obviously, the preference continues to be with the names like Axis and ICICI Bank. HDFC Bank would be a good contrabet, with the impending merger. And among the smaller names or smaller banks, we like DCB Bank, Federal Bank, and CSB Bank. So overall, the preference still continues for the private sector banks vis-a-vis the public sector banks.
Okay, all right. Well, that's interesting to know. And how do you see NBFCs also playing out, Neha, given what's happening in the banking space? Could we see some impact of that on NBFC stocks as well and companies?
Yes. So in a rising interest rate scenario, NBFCs are at a disadvantage primarily because they don't have access to retail deposits or CASA deposits. So the cost of funds obviously for NBFCs is rising. And another aspect is that banks have got very aggressive in the retail lending space. NBFCs are losing market share to the banking system. That said, the niche NBFCs which are catering to a particular market segment will continue to thrive. So if we have to talk about the segment-wise breakup of NBFCs, housing finance companies, there is a lot of competition from banks for home loans. The latest credit data shows that housing loan from the banking system is growing at a very healthy pace. But there are small NBFCs which are into niche segments like affordable housing, so that they may continue to do well. Say for example, a Home First Finance, which is into affordable housing, will continue to do well because they are growing at a much higher pace. But overall, NBFCs are losing market share to banks, and hence the preference still continues for banks over NBFCs.
Okay, great, Neha. Thanks for joining in and talking to us in detail about how the banking sector is shaping up and how things could look in 2023, also with some updates on the NBFC space. Okay, let's shift gears and talk about the technicals of the market with Chandan Taparia. Morning, Chandan. Are we again bracing ourselves for a weak or rather a gap down session today as well?
Good morning, Karnya. Thanks for having me. We have just few more days to finish the 2022. In this year, we are up by around 4.44% as of now in Nifty. But Bank Nifty has outperformed by around 20%. We have seen good momentum in metal, selective banks, few auto names, while IT and pharma were fighting to go down by more than 10%. So finally, if I sum up the entire setup, the year was all about the declines were being bought and follow-up was missing even after hitting the new highs. Now, talking about an immediate point of view, recently we have corrected from 18,887 to 17,777 marks. And from that level, Nifty has bounced to 18,181, but fell to concur and surpass the same. And because of that, we are witnessing some decline. But I believe that we are likely to be in a broader range. Some choppy trade could be there, as most of the participants seems on vacations. So I believe 18,018 or 17,950 could act as an immediate support with hurdle of 18,181 kind of level. Today is the monthly expiry. And if I look at the expiry to expiry data setup, we are slightly higher than the weekly VWAP, but lower than the monthly VWAP, which clearly indicates upside is kept, but downside supports are intact. So we have to play the buy on decline or range bound kind of setup for the day. Use the decline towards 18,018 or 17,950 as a support to play any kind of trade setup, to play some intraday swing of 50-80 points.
Okay, all right. Let's also talk about some individual stocks on back of news flow which could be in the limelight. The first one I want to highlight is Tata Power. Its subsidiary Tata Power Renewable Energy has received an LOA to set up 255 megawatt hybrid power project, and this will be commissioned within the next 24 months from the PPA execution date. Now, if we look at Tata Power's stock, last couple of days it has seen a good recovery. It has crossed that 200 rupees mark quite successfully. But again, off late it has been a bit lackluster. So talk to us about what's likely to happen on the counter.
Yeah, so Karunya, we have seen good run up in Tata Power in the last year when it rallied all the way from 74 to 267. But in this year, it fell to move beyond 300 and gone back to 200 sub level. If I look at the overall setup on month basis, we were witnessing selling pressure. But in this week, we have recovered well from the lows. It made bottom near 295, led by some put writing at 200. But at the same time, some hurdle are also visible. So I believe some bounce could be there, but that will be restricted to 216 kind of level. So on immediate point of view, 201, 202 is the support, and bounce can be placed towards 215.
Okay. The next stock on our radar is Ashoka Buildcon. Now, this one has clearly bucked the trend or the weakness of the market. They've received 3 projects worth 755 crores from Madhya Pradesh Purv Kshetra Vidyut Vitran Corporation. But if we look at the last 5-day move also, Chandan, good 8-9% on the upside added. Is it likely to gain more in the foreseeable future?
Yeah, so it seems that the stock can see some uptick from current levels. In this week, it's up by around 11% in just 3 trading sessions. Good recovery seen led by formation of outside bar or engulfing pattern. We have seen a surpassing of falling supply trend line on the weekly chart. So price setup looks quite promising. A small follow-up can take it towards 95 level. So on immediate basis, we can continue to be with long position with support near to 83.50. Look for target of 92.50 to 95 marks.
Okay, all right. And the third name on our list is JSW Energy. They've completed the acquisition of In Bharat Energy Utkal via CIRP. In fact, this particular project, In Bharat Energy, is implementing 700 megawatt thermal power plant in Odisha as we speak. Now, JSW Energy, again, a good 30 rupees upside seen last 1 week. Is the momentum going to continue, Chandan?
Yeah, it's a momentum counter, and good part is the stock has recovered when market also recovered well. The good part is on weekly formations, it is like a bullish engulfing, which clearly indicates that weakness is getting arrested for some healthy uptick. So some more momentum could be there. The stock is turning from their deep oversold territory. Momentum indicator like RSI and MACD also given a bullish crossover. So can look at support near to 259, can see an uptick towards 285.
Chandan, we were talking about the banking space before you joined us this morning with our fundamental analyst from Moneycontrol Pro. She was rather optimistic about the fundamentals, especially for private sector lenders. Now, before we talk about individual stocks, I want your view on Nifty Bank. In fact, that's something a lot of our viewers are also posting on our live feed. So talk to us about how Nifty Bank is positioned right now.
So Karunya, if you ask me the conclusion of 2022, the conclusion only Bank Nifty. because Nifty is up by 4.44%, your Bank Nifty is up by more than 20%. So one of the sector where huge strength and momentum was visible. So if I talk now on immediate point of view, we are moving in a rising channel. Even 3 days back, it took support near to 41,600 marks. That was exactly the bottom of the rising channel on the daily and the weekly scale. If I look at the major breakout zone earlier, the stock index has given a breakout above 41,800, 42,000, and that those zones are likely to act as a major support to drive this momentum. So overall, positive bias, more strength could be there, decline could be both. 42,400 is the immediate support for Nifty Bank. We can see an uptick towards 43,250 to 43,500. And now if you compare with the private and PSU, I believe both of the banking could do well. In private, we will talk about name like HDFC Bank. We can talk about counter like ICICI Bank. In PSU, we'll focus on SBI and Bank of Baroda. So most of the PSU and private bank are having good momentum even at the beginning of 2023. And all these stocks have potential to rally by 5 to 10%, led by outperformance in the entire Bank Nifty space.
Okay. I want to address some more comments and queries that our viewers are posting. Satya is asking us about Sona Comstar. Could you talk to us about the support levels right now? What are the figures to keep on your radar for Sona Comstar?
Yeah, so Karunya, this counter has been underperforming in entire auto space, auto ancillaries. It's down by around more than 43% in this year. Almost lost all its momentum. In fact, it is making lower top, lower bottom on month basis. I see starting from December 2021, the lower top, lower bottom sequence is clearly seen in the chart. Even if I look at the peer competitive and comparative analysis, this is one of the weakest structure in the entire auto and auto ancillaries. So don't see any hope of the recovery here. However, it's highly beaten down, so bounce could be seen. But it's very tough to comment whether bounce could be hold. So I'll avoid here. Even if bounce happens, we'll suggest to exit the positions. As of now, the support goes near to 400, 405. If bounce happens, then even it would be tough to surpass 444. If someone is talking about auto, better to talk about TVS Motor, Bharat Forge, M&M. These stocks have more potential to outperform the entire space, as well as the counter which you talked about.
Okay, all right. The next query I want to bring up is from Raja. They want to know about DLF. Now, DLF has had a rather sluggish, lackluster year, down about 5.5–6% year to date. But last couple of days, I mean, it has seen, not just last couple of days, but in the last 6–7 months, it has seen its good phases, in tranches. Now, last 1 week, it has tried to sort of rebound. It has added around 15–20 rupees as well. What should one do right now at the current juncture with DLF if they're holding the stock?
So Karunya, DLF is just down by only 5% on year-on-year basis. But if I look at the monthly scale, from last 10 to 11 months, it's struggling to hold beyond 400 level. In the month of Feb, it just made high near to 400. Even in April also, it made high near to 407. In the month of September, the same high was formed. Even in this month also, it made high near to 415. So every time it is just coming near to 400 and turning lower. The momentum is getting fizzled out at 400 marks. So it requires a decisive breakout above 400. Then only we can talk about next leg of rally. But the good part is overall structure is positive to range bound. And we have seen the good correction from 418 to 350. So 350, 355 could act as a support to get some bounce. But yes, we need to look at positive to range bound bias. Immediate hurdle goes to 390. If it sustains above 400, then only we need to talk about further bigger target in the stock.
Okay, all right. I want to also address Glaxo, GSK Pharma. Vinod Kumar is asking for your view again. Very, very flattish mover last couple of months. What's the likely way forward for GSK?
So when you talk about GSK Pharma, first thing you need to keep in mind that pharma stocks have not performed well in the entire year. Your Nifty Pharma Index is down by around 11% on year-on-year basis. And if you look at the GSK Pharma, this stock has also not done much. However, support was visible at lower levels, but follow was totally missing. So I'll avoid the pharma name. Even if any bounce happens, that will be opportunity to exit. As of now, on immediate basis, the stock has support near to 1300. Hurdle goes to 1375 to 1380 marks.
Okay, all right. Mog is asking about NFL National Fertilizers. Now, like many of the public sector companies, this one has also seen a phenomenal up move. Last 1 month added more than 30%. In fact, even yesterday, I mean, what a star performer it was. Talk to us about what happens next or what's likely to happen next for an NFL.
Yeah, so currently we have very positive stance on most of the fertilizer as we are heading towards the budget. We have bullish setup and view on most of the name, including NFL, FET, RCF. So NFL is one of the strongest chart setup. You look at the monthly chart, a classical pole and flag breakout happened in this month. However, it witnessed a small decline when market is falling down, corrected from 82 to 58 levels, but it witnessed a V-shaped recovery. And I believe the strength and momentum could continue. As of now, looking at the price structure, 73, 74 is the support, and we have potential to go towards 82 to 88 kind of level. When you talk about NFL, I cannot ignore about the fact, which is also one of the strongest name in the entire space, up by 120% in this month, up by more than 145% in this year. Still, we have potential to move by 25% to rally towards 350 to 375. So NFL fact speak, these are the names which are likely to do some positive momentum to generate alpha in this market.
Okay, that's interesting. Baljit Singh is asking about Maruti Suzuki. He had bought 100 shares at 8,500 levels. Now, Maruti, did not come up when you were talking about the stocks. You're optimistic from the auto space. While this one has been a bit of a slow mover, if we look at the year-to-date gains, a giant like Maruti adding 11-12% is not a bad deal, really. But for somebody who's entered at 8,500, is still losing money on this one. Talk to us about what should they do.
Yeah, so talking about your comparative analysis, your Nifty Auto is up by around 15% in this year. And if you talk about Maruti, that is up by around 13%. So in line with the index, it has done relatively okay. But on the other hand, TVS Motor M&M has really seen the bullish momentum. But only concern is that overall setup is strong if I talk about monthly and the bigger time frame. But on weekly point of view, it was making lower top, lower bottom. In the month of at the beginning of November, it made high near to 97.70 and now continuously falling down with lower top, lower bottom. The good part is stability was noticed 3 days back with support near to 8,000, 8,080. So 8,000 could act as a major support. As of now, I can only comment about the bounce towards 8,700. So some sort of bounce could be seen, but momentum is totally missing. If you conclude, is it the good name? Yes, good, but only for positional. If you are looking for momentum, then you can change your gear towards TVS Motor or M&M to get the better return in the market.
Okay, all right. Chandan, what do you think is a good level to buy Varun Beverages? Ashwin is asking us this question, but given that the stock has cooled off about 120 rupees from its 52-week high, do you think it's a good time to enter, or should one wait for it to cool off further?
So this stock has really done well. From last 5 consecutive years, the stock is moving year-on-year basis. It started this rally from 100 in 2017, and now in this year it made high near to 1400. One of the strongest gainer, which has gained by more than 123%, and one of the strongest FMCG name. But overall trend is positive because of the market consolidative. Some dip could be there, but you should not miss the dip because such kind of a strong counter likely to see the outperformance. So right now it's quoting near to 1323, and it declined towards 1250 could be the buying opportunity, and then stock can see the run up towards 1400 to 1500 zone.
All right, okay. And Chandan, how about your own preferred picks? Which stocks are you keeping on your radar?
So while discussion, I talked about all the names which I like, but let me now be very specific with the levels. We like TVS Motor. TVS Motor has bottomed out. This stock has seen the good momentum. In this year, is up by 72%, even after the correction of around 20% from higher levels. It has bottomed out recently. It is in the bullish divergence on the mechanical indicator. Managed to surpass its multiple barrier of 1050, 1060 zone. And we believe this momentum could continue. So one can be with long side in TVS Motor. 1055 is the support. We can see an uptick towards 1120 to 1150. Apart from TVS Motor, we have focused view on selective metal name. Nifty Metal has really done well. Outperformance and shining could be there, given a consolidation breakout. So decline could be bought with support of 560. Here we will target towards 595. Apart from that, PSU banks could be in focus, and I'll talk about Bank of Baroda. It has taken support at its 50-day exponential moving average. So any decline towards 175, 177 will be buying opportunity. We are looking for an uptick towards 192 levels.
Okay, so TVS Motor, Jindal Steel and Bank of Baroda on Chandan's list. Thank you so much once again, Chandan, for joining us and helping us out, on the last expiry for the year 2022 and helping our viewers out with their queries and concerns. We wish you all a very happy new year in advance at Motilal Oswal. Chandan, thanks once again for joining in. And guys, on this note, we'll wrap it up right here on Morning Trade. Thank you for tuning in.